I'm Shelby Holliday. It's Friday, and it's time for Barron's Buzz. Joining us with a sneak peek at the latest issue is senior editor Jack Hough. Happy Friday.
Hello, thank you.
So first up, your cover story this week is you take a look at funds that do well by investing in companies that do well. Tell us about it.
It's our sustainability issue. For my part, I recycled all my jokes from old stories for the one I wrote. But our cover story is about mutual funds that invest in companies that score well on matters related to ethics and environmental concerns and governance.
And those companies actually do better.
Yeah, I mean, don't...
Companies that are, I guess we should say, irresponsible.
Don't picture like Ben and Jerry riding in a Volkswagen bus with flowers and this and that. This is not the kind of thing we're talking about. 80% of S&P 500 companies now issue sustainability reports. There is research out there that shows that companies that score well on this stuff outperform other companies because, look, you're avoiding lawsuits. You're avoiding backlash from angry customers. You're operating efficiently, right? So they do well. And so we took a look at funds, used an independent ranking of sustainability factors, and then we did our own sort, using some mutual fund data on how those funds perform, and we came up with a list of who are the top performers in the group out there, and they're really some of the best performers in the mutual fund universe. All
right, we'll have to look for that one. Next up, let's talk about the labor market. Could full employment, or at least being close to full employment, actually be a bad thing?
Yeah, well, look, jobs are good, employment's good. The unemployment rate is pretty low right now. The argument out there is that there are a lot of people not looking for work, right? There are 2 million fewer workers than you would expect us to have right now if we were at full employment. And our economics editor is arguing here, look, the job climate right now is so good that we've got to put aside this idea that these people are just waiting around for the opportunities. I mean, it looks like the opportunities are there.
So where are they?
He's now saying these folks aren't coming back to the labor market. Maybe we have a permanent shift in a lower percentage of the workforce that's actually going on. He thinks they might be employed in the underground economy. Some of them might be collecting disability. Some of them might be supplementing that with some other work that doesn't necessarily show up on the books. He's got some different theories on the subject, but one takeaway from it for politicians, I guess, is if you want to think of some big spending project, if we're going to put people to work building solar farms all across America, and if he's right about the fact that we're at full employment now, you're not going to be taking those people from the ranks of the unemployed. You're going to be taking those workers from other jobs. It could be a crowding out effect. So it's really something to think about in terms of policy making.
It is. It's really interesting. And last but not least, Hurricane Matthew is taking a toll on the East Coast. Obviously, our thoughts are with all of those affected.
Yes.
And, this storm, like many others, is really unpredictable. And that makes it really unpredictable for investors who tend to try to jump on these things.
Yeah. First off, if there's someone out there who heard that there's a big hurricane coming for Florida and their first thought was to call their stockbroker, go out and buy a dog or something to love because you're like broken in here and you need to be fixed.
Morally not cool.
Right. But this is not an ethical position that we're taking. What we're saying is, storms are chaotic systems. They're hard to predict. And even the follow-on effects, if you do have a bad storm, can be hard to predict. Yeah, maybe Home Depot gets a sales rush, but it also gets higher expenses to go with that rush because they need to pay overtime. They need to move freight around quickly. They might have some store damage.
Right.
Restaurants along the coast might get hurt, but some of those chains will just get more customers inland as people move to safer areas. And maybe the reinsurers will take a hit, but they can raise their premiums over the next year. Past hurricanes, they did fine. So these stocks, when you see these stocks jumping or getting hit when storms are approaching, it's usually malarkey. People should ignore these trading ideas and just think about the long term.
Be cautious.
Yeah.
All right, well, we're thinking about everyone out on the East Coast in those southeastern states.
We are.
Hopefully, it doesn't do as much damage as people expect.
We hope so.
All right, well, thank you so much for being here.
Thank you.
And as always, you can catch Barron's online and on newsstands. Have a good weekend.